In Chapter 16, we begin looking at process costing. If you'll remember, in the previous chapter we covered job costing. Job costing is what we use when we are producing items that are specific for each customer. Process costing, on the other hand, is what we use when we're producing something in a mass production type facility. So in process costing, rather than tracking costs based on each specific job, we'll track costs in total, and we'll track to watch where our costs are in the overall process or in the overall manufacturing facility. And we'll do this by tracking our costs as they move through different departments or activities within work in process. So process costing is used when we're producing typically small, low-cost items that are all identical. We're mass producing them in a continuous production process, and our costs cannot be easily or directly traced to each unit of product. If our costs were directly traced to each unit of product, then it would be more appropriate to use job costing. But just to give an example of a type of product where we might use process costing, think about if you are producing cereal. You produce all of your cereal in whatever batches that you're making, and then you split what you have created into the different boxes that then go to your customers. Each box is the same, but we produced everything that went into those boxes in one mass production type process. So this is process costing. If we want to compare the two different methods, under a job order system, we're looking at custom orders that are made specific to our customer. So they're typically going to be produced in lower volume. These are usually more high-cost things, so we're not producing them quite as quickly. There's a lot of flexibility in what we make. Therefore, there is low to medium standardization, meaning whatever the customer wants, we can flex and make it work that way. Process costing, on the other hand, this is repetitive operation, so it's a single process that we're running our product through. These are homogeneous products, meaning all of our products are typically about the same. We have high production volume, so we're creating a lot of what it is we're creating. And we have low flexibility and high standardization. So once our process is in place, we really can't flex to make changes because everything's going to be highly standardized. Now, this isn't to say we can't have different batches or types of cereal, but once our specific process is in place, there's very little flexibility without things having to be engineered and changed. Here we have a basic picture of the flow of each of our costing operations. So we've got our job order costing at the top and process systems at the bottom. If you'll note, both systems begin the same way. We have all of our various product costs that we begin to put into our manufacturing system. So if you remember, with our job order system, we put our materials, our labor, and our overhead into the various jobs. As we finish those, we still track those jobs separately because each is a separate finished good for a different customer. And then we have our specific cost for each and every job, and we track those on those job cost sheets. On the other hand, process costing, we are processing things in bulk. It's not for specific customers, so we're not going to track things as to what job they're for. Instead, once we enter the work in process, we typically have different processes or different departments that our products are going to move through. A typical example is if you have a company that makes juice. One of the processes, departments, activities, whatever your specific company calls them, the first process or department could be the extraction department, and that's where they extract the juice from the fruit. The second department or the second process could be where they mix that fruit juice with some type of water or sugar, so they have a mixing department. And then maybe they have a third department, and that's the bottling department or the bottling process. We're going to track where our specific costs are in the overall process. Are they in process number 1, process number 2, process number 3? Once we finish the bottling process, or in my example, that third process, we would then have finished goods that are ready to be sold. However, with process costing, we're also going to keep track of how many of our costs have totally completed each specific process. And we call this, we're tracking equivalent units. So let's think about this. The first process I said was the extraction process. So let's say we have started the process of extracting juice, but we're not completely finished. Let's say that process takes 2 hours. If we are 1 hour into extraction, we would say that for equivalent unit purposes, the units within this process are 50% complete. So if we had 100 units in process 1 that are 50% complete, we would say that the equivalent complete units would be 50, because that's 100 units that are partially complete. How far are they? They are 50%. So 50% multiplied by 100 gives us the equivalent units. The idea behind equivalent units is the idea of what would be the equivalent units if we started one unit and moved that one unit fully through the process before we started another. If you'll keep in mind, in process costing, we have multiple things moving through the process all at one time. So things take longer than if we were simply doing one at a time and quickly moving those items through. So the equivalent units would be the equivalent number of units that we could have started and completed if we weren't mass producing. So we simply look at how far something is in various processes and multiply that by the total number of units within that process. So as we're looking into equivalent units of production, we're going to use our equivalent units to help us calculate the value of where things are in our work in process. And I want to note, for our various product costs, equivalent units work differently. So let's think about this. Our product costs, we've got direct materials, direct labor, and overhead. If you'll remember, direct materials are simply the materials that we put into our process. So if you think about any type of process costing system, typically you put your direct materials in at the very beginning. So oftentimes you'll see when we're talking about our equivalent units of production that once your direct materials are put into the process, so once they enter work in process, you'll typically see that direct materials are considered 100% complete. The items where you will see different percentages in completion are within our conversion costs. Because once we put our direct materials into the system, we're done. We're not going to continue putting direct materials in. We put them in and they move through the process, but you only put them in one time. So once they're in, they are 100% complete as far as direct materials are considered. Our conversion costs, however, our direct labor and our overhead, those things happen throughout the process. So this is where we're going to see different percentages of completion. So for example here, if we have 10,000 units that are moving through our overall process, 10,000 units, we're saying that we have already put all of the materials in. So as far as direct materials are considered, these are 100% complete. So we would say, as of direct materials, the equivalent units are 10,000 units. However, our conversion is only 20% through the process. So we would multiply here the 10,000 total units by 20%, and we would say the equivalent units that are produced would be 2,000 units. That's like saying we have 10,000 that are 20% done, or the equivalent of completed units would be 2,000 complete units. We're now going to move through an example of process costing, and you'll see here that we're using the weighted average method of equivalent units. You can use both the weighted average and the FIFO method. In this case, we're going to use weighted average. Typically, now that we've seen a shift towards, and we'll discuss this a little bit at the end of the chapter, many manufacturing plants typically try to keep their inventory very low because holding inventory is costly. So when we're talking about the difference in our costing that we would see between using weighted average or FIFO, the difference between the methods is pretty immaterial or pretty small. We're going to be using weighted average, but do be aware that there are technically two different methods. So as we're going through this example, we're going to look at a specific company. First, we'll determine the physical flow of units. So how do our units flow through our manufacturing process? We'll compute the equivalent units of production, and along with that, we'll compute a cost per equivalent unit. This is, if you remember in job costing, we had a cost for each specific job. When we're doing process costing, we're still able to compute our cost per unit. However, our cost per unit is going to be allocated over all of the various units we make, not for each specific unit. And we'll compute a cost per equivalent unit, meaning we're looking at if everything was totally finished in the manufacturing process, what would be the finished cost per equivalent unit, meaning we know that not everything is totally complete and not everything is totally finished with our process. However, if everything was, this would be the number of equivalent units, and this is what each of those equivalent units would cost. Finally, we'll look at how we assign and reconcile any differences in our costs. So first we have just the general overview of our company's process. You can see here we have a basic process. We'll have materials coming in, and then we move into our actual work in process. This company has two specific departments or two specific processes. We have blending and roasting. Once we finish both of our processes, things can move to where they are then considered finished goods. We'll store those as finished goods until they are then sold to our customers. So when we're looking at the operations of our company, we need to go ahead and begin to have an understanding of what is going on in the current period. So to do that, we first need to know, where did we begin the current period? What have we started this period? And what have we completed this period? So let's think about this. This is the flow of how things work. Typically, anytime you begin a new period, the way process costing works is it's a continuous process. So it doesn't matter if we're coming to the end of a month or end of the year. Just because we're coming to the end of some date on our calendar, we're not going to stop our processing department or our processing system. So we're continuously having products move through our manufacturing facility. So whenever we start a new month or a new period or a new year, we're typically going to have some work in process that was in process from the previous period that is not yet complete. So this is going to be our beginning work in process. Then we'll have any units that we started during the current period. So these are things that we have put into our manufacturing process during the current period. Then anything that we have completed, we will complete and transfer it out. Where does it transfer to? It transfers to finished goods. So the difference between what we started with, then what we actually began this period, minus what we completed and transferred out, tells us what do we end with in work in process during the current period. So we can see here they've given us some information about where these various units were in the overall process. So you can see we began with 30,000 units that were partially completed. The direct materials were already put into the process, so those were considered 100% complete. We then have our various conversion costs that are telling us that these 30,000 units were 65% complete. As we move forward, you can see we started 90,000 units during the current period. We now need to understand how far are they through the overall process. And you can see that down below. When we look at the ending work in process, we're told that the items that are still in process are 100% complete as far as direct materials go, and 25% complete moving through the overall process. Then I'll look briefly here. You can see the units that were completed and transferred out. If these were completed, this means that they are 100% complete. So that's why you see these completion rates of 100% for both direct materials and conversion. We then have some specifics about the dollar values of our various costs. You'll see here, first we have our beginning work in process, and then we have the costs for our current period. So you can see here we've got the costs for our direct materials and our conversion costs. These were for the items that were in our beginning work in process. And then we've got the costs for the current period. We have our direct materials, our direct labor, and our factory overhead. Just take note of what all these costs are because we'll be using them on the next slide. So when you see costs again, this is just coming from this slide. I do want to note that when we use these costs again, we're going to lump our conversion costs together. You'll see up here we already have conversion costs in total for the beginning work in process. But down here what we'll do is we'll add together our direct labor and our factory overhead costs for the work in process that was begun during the current period. So this is where all the numbers that we'll be using as we move forward are coming from. Now keep in mind the bottom line is that we're wanting to come up with a cost per unit of our product. And it's important to do this because we need to know that as we're selling our products, what is going to be our cost of goods sold. And that's why we need our per unit cost of our products. Now I also want to note that when we're completing the process costing and when we're using equivalent units of completion under the weighted average method, we're basically going to be lumping our beginning work in process with our current costs under the weighted average method rather than tracking these costs separately. Again, the difference between the weighted average method and the FIFO method are immaterial. But just so you know, in the FIFO method, we would be costing our beginning work in process first because it would be considered, since this was the first in, it would also be considered the first sold. That's a basic FIFO, is a basic accounting 101 type term. But again, we're using weighted average and we're going to lump all of these costs together just for simplicity. So moving forward, we now need to begin to understand the flow of our units. If you'll remember, we had 30,000 units that were in process when we started the current period. And then we began 90,000 units. So in total, we had 120,000 units that were moving through the process during the year, or during the current period. Then let's look at what happened. We transferred 100 units out of work in process and into a finished good. So 100,000 units were completed during the current year. And we had 20,000 left over at the end of the year. So we're just reconciling that in the end we've got 120 units that we're accounting for, or these are what we're trying to get our equivalent units of production cost for these units. Now what's important to know is if we completed 100,000 units, we don't actually have to compute equivalent units for these because they are 100% complete. But we do have 20,000 units that are not complete. So we need to look at how far are they through the process and compute our equivalent units for these 20,000 units depending on how far they are through our overall manufacturing process. So you can see here we transferred out, because they were completed, 100,000 units. So we don't have to compute equivalent units for these because they are 100% complete. So 100,000 multiplied by 100% is simply going to give us 100,000 equivalent units of production for direct materials and 100,000 equivalent units of production for our conversion costs. And that's because these are complete. So there is no difference between the actual and the equivalent units of production. Then let's look at those 20,000 in products that are somewhere in the process. As far as direct materials go, these are completely finished because the direct materials have been put into the process for these 20,000 units. So 20,000 units for direct materials, 100% complete, is 20,000 units. However, our conversions we are only 25% through our overall process. So as far as conversion costs go, 20,000 multiplied by 25% gives us 5,000 equivalent units of production for the 20,000 units that are still in process as far as our conversion costs go. So here are our various equivalent units of production. For direct materials, we have 120 equivalent units of production, and that's because for the 100 units that were completed, direct materials is of course 100% complete, and then also for the 20,000 of units that are still in process, the direct materials have been 100% put into the process, so 100% for 20,000 units is 100%. The same is true for conversion. There's no conversion costs left incomplete for the units that we completed and transferred to finished goods. So we've got 100,000 units here. However, the place that we'll see the difference is going to be between our conversion costs for the items that are still in the process. We've got 20,000 items, and they are about 25% complete. So the equivalent units of production is 5,000. That's why we'll see for direct materials we have 120 equivalent units of production, but then for conversion costs we only have 105,000 equivalent units of production. Now these units of production are going to be very important to where we get the cost per unit of our products. So for the cost per unit for our direct materials, we'll use 120,000 units. However, for our conversion costs, we're going to allocate those costs over just 105,000 because that is the equivalent amount of units had they been completed. So here we have our various costs. The costs of our beginning work in process and the costs that were incurred during the current period. Remember, these are coming from a couple slides back, and this information is given to us separated between direct materials and conversion costs. So we just bring our costs over here. Again, remember this conversion cost is going to be the sum of our direct labor and our manufacturing overhead. So we have our total costs for direct materials, our total costs for our conversions. Remember, direct materials for all of our units were 100% complete. So we divide our total costs by 120,000 units of production, and this tells us that each of our units cost us $3 per unit for direct materials. Then our conversion costs, remember we had 100,000 units that were totally complete, and then we had 20,000 units that were 25% complete. So that gave us equivalent units of production of 105,000 for our conversion costs. We divide our total conversion costs by 105,000, and this tells us that the equivalent cost per unit of production is $4.62. So we have the various costs that make up our product costs. We would add these together for the cost per product. So we can see here we've got some information that we can just look at our total costs accounted for. We've got the cost of the units completed and transferred to the blending department. You can see here the direct materials and the conversion costs with our various cost per unit. And then we've got the cost of whatever remains in work in process. Remember, these are the 20,000 that are still in process. So we have, as far as direct materials go, we have 20,000 multiplied by $3. And conversion, we've got 5,000 equivalent units of production multiplied by our cost per equivalent unit to give us our total costs for work in process. And then we have our total costs that we have accounted for. Here we just have a basic process cost summary. There's a lot of information given here, but it gives us all the detail behind all of our costs. We're told what our total costs are that we're accounting for. We're given information about our various units. We're given information about how we calculated our equivalent units, and then our basic cost assignment and reconciliation using our costs per equivalent unit. So this is just all of our information summarized into a process costing summary that's used by management. We're now going to look at the basic journal entries that we'll be using from when we are accounting for our various entries under the process costing system. These journal entries work the same way as our journal entries did in job costing, because remember, the basic difference between these two systems is how we actually track our costs for each job. So you'll see here, rather than tracking into specific jobs, we're going to be tracking into various work in process accounts. But the basic idea is the same. So first, let's look at how do we account for our materials costs. Again, we're just going to be tracking what's happening in our various accounts. So when we purchase raw materials, we will increase the raw materials inventory account. This is simply an asset account. And then in this case, we are going to pay in the future, so we'll record an account payable to show that liability. Had we paid with cash, this credit would just be through cash. As we are going to begin using raw materials, we're going to need to show an asset transfer transaction. If we transfer an asset from one asset category to the other, the end effect on our balance sheet is a net effect of 0, but it's still important to show that this is no longer considered raw material, it's work in process. So you can see here we're going to take this out of raw materials, and we'll do that by crediting raw materials, and then we will debit the various asset accounts. Here it's important to note that we're going to track which work in process department our materials are going to. So we've got some that are going to work in process for roasting and some that are going to the blending work in process account. Again, this is just transferring from one asset category to the other. Then, as we're incurring actual factory overhead, we'll need to show that, and you see we do that by debiting factory overhead for the actual raw materials that we're using, and then here we will credit raw materials to show that those materials have been used up. Again, this is the actual use, so this is why we are on the debit side of factory overhead. In a couple slides, when we're applying factory overhead based on a predetermined overhead rate, you'll see that we'll be crediting the factory overhead account when we get there. So next, let's look at our labor costs. Again, these are going to be very similar to our materials costs. So as we are using labor, we'll show the value of that labor going into our various work in process accounts, and then we will have factory payroll payable, or if we paid this immediately, this would just be a credit to cash. Then, as we are incurring indirect labor, we will go ahead and debit this to factory overhead for the actual amount of that labor, and then we'll again show payroll payable, or if we paid immediately in cash, we would show the credit to cash. Again, if we've got factory overhead payable, we need to pay it at some point in the future, so this journal entry is just showing us actually paying our payroll, and so now we're going to be crediting cash for the full amount that we've paid. Now let's look at our factory overhead. Remember, if we are on the debit side of factory overhead, these are for our actual overhead expenses as they're being incurred. So as we get our insurance bill, our utilities bill, things like that, we'll be recording those with our various credits here, and then we will be debiting factory overhead for the actual amount of our factory overhead. Then down here you can see as we apply that overhead, we're applying it on some type of overhead rate. So we're applying here by crediting overhead, and then we're going to debit that overhead to increase the value of our work in process. Remember, the same way our direct labor increases the value of our items in work in process, factory overhead is another conversion costs, and the cost of that overhead as we apply it to our products is going to increase the value in our work in process. Finally, let's look at the transfer of our goods. Here we're looking at as we transfer out of work in process, or as we transfer from one work in process to the other. So this is a very simple type transaction. As we move from the roasting department to the blending department, or vice versa, we would just need to see the increase in whatever department we're moving to, and the decrease to show that inventory moving out of that department. As we finish goods, we'll need to take those goods out of whatever department is that finishing type department. In this case, it's our blending department, and show the increase in our finished goods inventory. Again, these are just asset transfer transactions. They have a net effect of 0 on our overall balance sheet. Finally, here we're going to have a transaction that is not simply an asset transfer. This is when we have sold goods. So we're going to need to take them out of our finished goods inventory because we no longer have them on hand. Therefore, it's no longer an asset that we have for our use. And then we'll need to recognize the cost of goods sold. This cost of goods sold is very important. The whole reason that we're calculating our product cost and the cost per equivalent unit is because we need to be able to calculate the cost of goods sold. Our cost of goods sold would simply be our cost of our equivalent units multiplied by the goods that we've actually sold. So that's why we're keeping track of our specific cost of the units that we've produced. Finally, I touched on this a little bit, and when I mentioned how companies are cutting down on the amount of inventory that they're keeping on hand, and that's just due to some trends that we're seeing in the manufacturing process. So as our world becomes more globalized, here in the United States, we're now having to compete with other countries. And so in order to remain competitive in this new globalized market, there are certain trends that we're seeing pop up and becoming more popular. I mentioned that companies now are trying to keep their inventory balances lower. And because of these lower balances in our inventory, that's why the difference between using FIFO or weighted average equivalent units of production is becoming less important, because we're looking at a smaller overall balance in inventory, and that's due to a trend called just-in-time production. Just-in-time production is a way to save on our costs, and the idea here is that we're only going to get our inventory and our raw materials and supplies in time to begin using them in our manufacturing process. And that's because anytime we're having to store materials or inventory for a long time, we're wasting money, because storing inventory and things like that is very costly. We have to have a place or a warehouse to store them, so we're either paying for an extra building or extra rent to store these goods. And also, anytime we're storing things could get lost, they could get ruined, maybe in a flood or a fire, they could become obsolete, or they could be stolen. So just-in-time production is the idea that we're only going to get things into our facility in the amount of time that we actually need them. We're seeing an automation of a lot of our manufacturing facilities. So rather than having so much direct labor, we're seeing a transfer of our conversion costs away from direct labor and towards automation, meaning that we're seeing more machines that do our actual labor for us. Along with this rise in automation, we're also seeing a rise in our overhead costs. So that's why the tracking of our overhead costs and the proper costing of manufacturing overhead is becoming more and more important, because as these automation costs increase, our overhead is increasing, thus making it more important to properly cost our manufacturing overhead. Again, also with this idea of remaining competitive, there's a new focus on customer orientation and servicing your customer, keeping people happy. Along with that, we're looking at our design of our manufacturing facilities, making sure they are efficient and they're meeting both our needs as a manufacturing facility, making sure that we are efficient and effective, but also we're meeting our customer satisfaction needs. We're making things of good quality at a reasonable price. So along with this idea of looking at our design and our process, we're also looking at continuous processing. Continuous processing, and also the idea of process improvement or Kaizen improvement, meaning that we're continuously improving and adjusting our process to make things more efficient and effective. In the end, we should be having happier customers who are buying more. The better we make our process, the better we are controlling our costs. So with more sales, better cost control, we should be seeing a rise in our profit or a rise in our bottom line.